Good afternoon. It's Brian Shannon from Alpha Trends Blogspot. Today is Thursday, June 21st, 2007. We got a bounce back in the markets today. The S&P 500 closed with an 83-cent gain, or about 0.55%. So it didn't recover the losses from yesterday, but we did get a good dent into them. And looking at this daily time frame, really nothing has changed at all. We remain in a range-bound market that's going to be neutral until we get a break past resistance, or what's been recent resistance, that is, up near the 154 or so level. I'm just trying to get something here. But up near about 154 and a quarter down to our support area is close to this 140.49 really is what we should call it. Yesterday I said that our safety level would probably be down near 148 and a quarter. That might be a little bit aggressive. We'll see. But for now, it doesn't look like we have to worry about that. We got another bounce from this rising 50-day moving average. And like I always say, as long as the 50-day moving average is rising, you want to give the benefit of the doubt to the buyers. Occasionally, we do have setbacks like we saw in February. But today, the market bounced once again. And I will repeat this too, though. The more times support or resistance is tested, the weaker it becomes. Same goes through a for a moving average or some widely watched area. So it's possible that we could get another shakeout here in the next week or two that does bring us down towards this level and maybe a little bit lower than that, just to scare people. But I don't think that's going to change the overall neutralness that I think that we are in this market. And we've got a pretty mixed market, actually. When we look at the 10-minute time frame, first of all, back to the S&P 500, 152.5 looks like an area of potential resistance. And we saw a quick sell-off here in the morning. The market came down to about that 150 and a quarter level, bounced real strong, and then we saw another move higher, and then late in the day, another attempted rally. It didn't make a higher high, but it looks like we're heading towards some potential resistance. We do have a declining 5-day moving average, so that tells me you want to take it a little bit slow in here in regards to the S&P 500, but the Nasdaq is much stronger. The Nasdaq was up 0.93% today, or 44 cents higher, and you can see that it's tested that conjunction of the 10 and 20-day moving average down near the 47 level and bounced very nicely from there. The only thing that people are going to point to is today's volume was lower. And while that's true, it's still very impressive that it was able to get back above this level. What I said yesterday was that I was expecting, or that a possible scenario was that we were going to test this 47.20 level that we've been watching. That was tested, and I thought maybe we'd get a drive down towards 47.10, 47 even, and then I said a quick and powerful rally. That's exactly what we had happen here, was a quick and powerful rally, pulled back a little bit, now closed right back above that rising 5-day moving average. So I think short term we're back in a range until the market can get back above 47.90 or so, but the action is very bullish, and it's being led by a very bullish group, which is the semiconductors. Yesterday I said this is not what a double top looks like. And some people ask, well, what does a double top look like? A double top, very simply, is you've got point A, point B, and point C. You can only call it a double top after point C has hit, and then it takes point B out right in here. All this was just an area where the market had a little bit of resistance. The times that I see double tops being called, it's just unbelievable. Every time that a market gets to a certain area, they call this a double top, they call this a double top till it breaks out, etc. But the point is, the semiconductors are in a fantastic uptrend. On the daily time frame, we got bullish as it went back above this level right here at 36 about 2.5 weeks ago. We were looking for a move last week up to 38. It hit that. It came up to this level, and I've been pointing out over the entire week that there's been some real relative strength in this market, and partially because we've got such a bullish-looking weekly time frame. This bullish pattern here of this resistance broken and being tested, and all the moving averages heading higher, tells me that I think the market heads for at least the $40 level before this next little leg is over in the next couple weeks. But again, that's, that doesn't mean just buy it and hold and put your order in to sell at 40. What it means is that that's a likely target, but you have to look at the shorter term time frames and or come up with some way of determining when you're going to get out if it doesn't hit that level. Because What if it turns back around, heads down to 38, 37, 36, 35? You can't let go of the profits that you have, in other words. Defense wins the game. It's money management. Today, we had an early break past that resistance. The buyers held control as it consolidated right above that level, and then we had a strong close. So the semiconductors are acting very bullish. That shouldn't be a surprise. The relative strength in there has been suggesting that a breakout would continue. Go back and review the videos for the last couple days, because that's what I've been calling for. And we've got a rising 10, 20, and 50-day moving average here on the daily time frame. There's a lot of people out there who seem to be picking, looking for a top because the underperformance of the S&P 500. Well, the S&P 500 really led the market over here. Now it looks like maybe the Nasdaq is going to lead the market. The Nasdaq, on a relative basis, has been weaker than the S&P 500 this year. So maybe we're just getting that little outperformance right now. It's their turn to take the lead. The IWM, the Russell 2000, we saw support tested at 83. It's back to the middle of this range now that it's been in, and the 83 level continues to be important. So the market acts good. We've got the S&P 500 I would call neutral. The IWM I would call neutral. The Qs I would call bullish. And the semiconductors are overall very bullish for the psychology, in particular of the Nasdaq. So there's no reason to be looking for a top here. The evidence isn't there right now. Let's take a look at the stocks from the last couple days. The only thing we had open was Cypress Semiconductor. Unfortunately, I had to stop a little bit too tight in there. Got stopped out early with a 45-cent gain. The other stock was a short sale in SEIC from 58.70. And suggested lowering the stop to 58.05, so you should have been stopped out of that one with a gain of 65 cents today.